What if the single biggest threat to your crypto portfolio right now isn't a chart pattern, isn't a whale dump, and isn't even a regulatory crackdown, but a geopolitical conflict happening thousands of miles away? Because that's exactly what just shook the entire crypto market to its core. And what happened next? Nobody saw it coming. Let's rewind just a few days. Bitcoin was bleeding, Ethereum was sliding, and across social media, panic was spreading fast. But here's the thing most people completely missed. This wasn't a crypto problem. This was a global problem wearing a crypto mask. The Iran conflict escalated, and the moment geopolitical tension spikes anywhere in the world, institutional money does what it always does. It runs. It runs straight into gold, into government bonds, into cash. Everything considered safe. And crypto? Crypto gets left behind. That's exactly what we saw. Billions in selling pressure hit the market in a matter of hours. Not because Bitcoin broke, not because Ethereum lost its fundamentals, but because fear entered the room. But then, something shifted. Whispers of a potential ceasefire, diplomatic signals suggesting the conflict could de-escalate. And just like that, the entire risk sentiment across global financial markets flipped. Stocks stabilized, oil pulled back, and Bitcoin? Bitcoin started climbing off the floor. Ethereum followed. Buyers, the ones who'd been sitting on the sidelines with dry powder, waiting for exactly this kind of dip, came back in force. Selling pressure began evaporating, and what looked like the beginning of a brutal correction suddenly started looking like a textbook buying opportunity. This is what the smartest money in the room already understands. Geopolitical fear creates discount windows, and disciplined investors use those windows. Now here's where it gets really interesting. The institutions didn't leave. They never left. Behind the scenes, the largest players in this market were watching every diplomatic headline, every geopolitical development, not with panic, but with calculation. They weren't selling their long-term Bitcoin and Ethereum positions. They were reassessing entry points. That tells you everything about where the real conviction in this market sits. But here's what nobody is talking about yet. There are actually three forces quietly building beneath the surface right now that could determine whether this recovery becomes a full-scale rally or just another fakeout. And the first one? It has nothing to do with Iran at all.